This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra. Delhi continues to choke through the weekend, and even on Monday morning, AQI levels have reached hazardous levels yet again. It's becoming more and more difficult to breathe in the city. That's the big story in focus this morning on Morning Brief at 9. Also on the show, FPIs have exited positions worth 1.5 lakh crore rupees in this calendar year 2025 alone. Is it high valuations? Is it the low Indian rupee, or a deadly combination of both? Rohit Srivastava will be joining us on the show to get us an answer to that question. And in our global stories, Jensen Huang's Noida is likely to produce more H200 chips to satiate the demand from China. All this and more on this edition of Morning Brief at 9. This is Morning Brief at 9. First up, let's get you all the headlines we're tracking for you this Monday morning. Delhi-NCR chokes under hazardous smog as AQI touches and in some cases breaches the 500 mark at multiple locations, forcing GRAP Stage-IV curbs. Delhi-Noida schools shift to online and hybrid classes as air quality slips to severe and hazardous category. Prime Minister Modi to begin his 4-day visit to Jordan, Ethiopia and Oman to boost trade, defense and global South ties. India identifies nearly 300 products to boost exports to Russia as both nations target $100 billion worth trade by 2030. Meanwhile, India emerges as the world's third most vibrant artificial intelligence hub in Stanford University's latest global rankings. India's gems and jewellery exports jumped nearly 20% in November on strong diamond and silver demand. Air India offers up to 275 additional flights after government orders a 10% capacity cut for IndiGo. Bad news for consumers. TV prices likely to rise from January as memory chip shortage and weak rupee push up costs. And German luxury car maker BMW to introduce more mini models and double city presence in India to tap non-metro demand. Delhi-NCR is once again engulfed in a thick blanket of toxic smog, with air quality plunging deeper into the dangerous, hazardous zone across multiple locations. Pollution levels have spiked sharply, making the air unsafe to breathe and forcing authorities to step up emergency measures, which clearly are not even far from enough. Several parts of the national capital are now recording extremely high AQI levels. As of 6 a.m. today, AQI in Anand Vihar stood at 493. Wazirpur touched 500 and highest on the index. At JLN Stadium, AQI stood at 467, 488 at City Fort, 474 at ITO, while Chandni Chowk recorded 439. The situation remains equally grim across the NCR. In Noida, Sector 125, AQI was recorded at 461 levels. But remember, these are the official numbers. Data from website www.aqi.in shows a far worse count, with Noida AQI as high as 643 levels at 8:30 a.m. today. The website showed a spike as high as 800 to 900 levels across Delhi-NCR over the weekend. Officials attribute the sharp deterioration in air quality to slow wind speeds, stagnant atmospheric conditions, unfavorable weather and poor dispersal of pollutants, allowing toxic particles to remain trapped over the region. A dense mix of smog and fog has also reduced visibility to dangerously low levels, severely affecting traffic movement. Several areas have reported accidents, vehicle collisions and long traffic snarls on highways and arterial roads. Schools in some parts of Delhi-NCR have been switched to online mode for primary school students and hybrid mode for older children. With pollution contributing to worsen, the Commission of Air Quality Management or CAQM has stepped in, placing Delhi and NCR under GRAP Stage-IV, the strictest set of anti-pollution measures under the Severe Plus category. Now, these curbs are in addition to restrictions already in force under GRAP Stages 1, 2 and 3. Health experts warn that prolonged exposure to such high pollution levels can trigger severe respiratory and cardiovascular problems, especially among children, the elderly and those with existing health conditions. Residents have been urged to limit outdoor activities, follow advisories strictly and take precautions as Delhi and the NCR struggle through yet another intense spell of toxic smog.
हम सबको पता है कि पॉल्यूशन की क्वालिटी खराब होती जा रही है, एयर क्वालिटी खराब होती जा रही है और दिल्ली नहीं बाकी आसपास के शहरों की एयर क्वालिटी भी बहुत खराब होती जा रही है। अब इसके कारण तो बहुत सारे हैं, चाहे व्हीकल्स कहें, चाहे कंस्ट्रक्शन कहें, चाहे वेदर कहें, बट ये है कि ये एक ऐसी सिचुएशन है जिसमें हमको इमीडिएटली स्टेप्स लेने चाहिए ताकि हम इसको कंट्रोल कर सकें। अगर हम अपनी ओपीडी की बात करें तो ऑब्वियसली ये तो बहुत ज्यादा है कि जो हमारे नंबर ऑफ पेशेंट्स है वो बढ़ गए हैं। ऐसे पेशेंट्स आ रहे हैं जिनको पहले कोई भी प्रॉब्लम नहीं होती थी, बट अब उनको खांसी हो रही है, गले में दर्द हो रहा है, जुकाम हो रहा है। ऐसे भी पेशेंट्स आ रहे हैं जिनको पहले अस्थमा था या सीओपीडी था, पर अब उनको उसका अटैक पड़ रहा है और हमको उसके लिए उनको इनहेलर, नेबुलाइजर देने पड़ रहे हैं या फिर ओरल स्टेरॉइड भी देने पड़ रहे हैं ताकि उनकी प्रॉब्लम कंट्रोल हो सके।
GRAP-IV, we know it's and GRAP itself it's a reactive measure. So we are obviously coming to a situation, such a terrible situation, and the numbers that now GRAP-IV is invoked, rightly so. But there's a larger picture to it. It's what we've done throughout the year or years or many years ago, the decisions that were taken by the policymakers, that we are in this situation. These are not overnight things. We know that there are vehicular emissions, there's construction. Now, even if we, right now for GRAP, all the construction will stop and taking it in the, perfect mode that everything has stopped, so how many days will you do that? We'll see the 2-3 days and the numbers will come back, then it will be revoked.
Meanwhile, as air quality in the national capital slipped into the severe plus and hazardous categories yet again, authorities have ordered an immediate shift to online and hybrid classes in Delhi and Noida schools, aiming to reduce children's exposure to hazardous pollution while ensuring academic continuity. The directive covers government-aided as well as private schools under the Directorate of Education, NDMC, MCD and the Delhi Cantonment Board. Schools have been asked to conduct classes in a hybrid format, both physical and online, wherever feasible until further notice. The move comes as curbs were tightened under Stage 4 of the Graded Response Action Plan, following a sharp deterioration in air quality. In its official order, the Directorate of Education said students up to class 9th and 11th will attend classes in hybrid mode with immediate effect. And amid the thick smog gripping Delhi-NCR, IndiGo has issued a travel advisory for passengers. Sharing a post on its official X handle, IndiGo stated that due to winter fog this morning, visibility around the airport is currently reduced. Operations are adjusting to changing weather and some flights may take a little longer to depart. The airline assured passengers that plans, schedules and connections remain a priority and their teams are available to provide support throughout the journey. Road traffic may also be slower due to the fog, so passengers are advised to allow extra time while traveling to the airport. IndiGo teams are closely monitoring the situation and will provide updates as per the company's tweet. Now, another airline, SpiceJet, has also issued an advisory stating that due to poor visibility and adverse weather conditions in Delhi, all departures, arrivals and their connecting flights may be affected. Passengers are advised to regularly check their flight status through the airline's official channels. And moving on now to other stories we're tracking for you this Monday morning. Prime Minister Narendra Modi will begin a 4-day, 3-nation visit today, traveling to Jordan, Ethiopia and Oman with a focus on strengthening India's bilateral partnerships, particularly in trade, defense and regional cooperation. The first leg takes the Prime Minister to Jordan from December 15th to 16th at the invitation of King Abdullah II bin Al Hussein. Prime Minister Modi will hold talks with the Jordanian leadership to review the full spectrum of bilateral relations and exchange views on key regional developments. The visit is especially crucial as India and Jordan mark 75 years of diplomatic relations, providing an opportunity to deepen engagement and explore new avenues of cooperation while reaffirming commitments to peace, security and stability in the region. Now, in his second leg, Prime Minister Modi will travel to Ethiopia on December 16th, marking the first ever visit of the Prime Minister to that country. Prime Minister Modi will hold wide-ranging discussions covering all aspects of India-Ethiopia ties. And India has identified nearly 300 high-potential products that could majorly boost exports to Russia as both countries work towards an ambitious $100 billion trade target by 2030, according to official data. Now, currently, India exports just $1.7 billion worth of these products to Russia, even as Moscow's total imports in these segments stand at $37.4 billion. Officials say the sharp gap highlights a massive opportunity for Indian exporters and could also help narrow India's $59 billion trade deficit with Russia. The Commerce Ministry has mapped India's supply strengths against Russia's demand, identifying key sectors such as engineering goods, pharmaceuticals, chemicals and agriculture as major growth drivers. India's overall share in Russia's import basket remains at just 2.3%. India's imports from Russia, meanwhile, have surged more than tenfold since 2020, driven largely by crude oil, which now accounts for nearly 21% of India's oil imports. Fertilizers and vegetable oils are also key imports from Russia. And India has surged to the third place globally in Stanford University's 2025 Global AI Vibrancy rankings, marking a major leap in the country's artificial intelligence journey. Now, India has climbed 4 positions in a year, overtaking the United Kingdom and leading Asian economies such as South Korea, Singapore, as well as Japan. The report, released in November, ranks countries on 7 pillars, including research and development, talent, infrastructure, economy, responsible AI, public opinion and policy, as well as governance. India now trails only the United States and China in overall AI progress. Stanford notes that India's rise is driven by strong gains in AI research output, patent activity, education programs and infrastructure supported by a $1.25 billion government pledge. However, the report also flags a dip in India's policy and governance score, highlighting areas that still need strengthening. And India's gems and jewellery exports posted strong growth in the month of November, rising nearly 20% year-on-year to $2.5 billion, according to the Gem and Jewellery Export Promotion Council. Exports stood at $2.1 billion in the same month last year, while overall shipments during the April to November period remained largely flat at just $18.86 billion. The surge was led by cut and polished diamonds, with exports jumping to over $919 million, while lab-grown diamond exports also rose more than 10%. Now, studded gold jewellery and silver jewellery saw sharp gains driven by higher job work demand and improved bullion supplies. However, gold jewellery exports remained flat amid volatile prices. The Export Promotion Council says demand is stabilizing across key markets like China, Hong Kong and the West Asia, helping offset slower growth in the United States. Air India has offered to operate up to 275 additional flights this month after the government ordered a 10% capacity cut for rival IndiGo as authorities move to rebalance routes during the peak travel season. The Tata Group airline has also sought clarity from the Aviation Ministry on how long the curbs on IndiGo will continue to plan its capacity accordingly. A senior government official said IndiGo operates nearly 1,900 routes, with at least 10% now being cut. Officials say a final decision on reallocating routes to Air India, AI Express and Akasa will be taken in the next few days, stressing that passenger inconvenience will not be allowed and overdependence on a single carrier will be addressed. And television prices are set to rise by 3 to 4% from the month of January as sharp rise in memory chip costs and a weaker rupee now past the 90 rupees to a dollar mark put pressure on manufacturers. Industry players say the impact is major as key components like memory chips and open cells are imported while local value addition remains limited. The global memory chip crunch, driven by soaring demand from AI servers, has pushed prices sharply higher, with some manufacturers warning of hikes of up to 7 to 10%. Now, experts say the price increase could blunt the recent boost from GST cuts on larger TV screens, even as demand for smart TVs shows sign of slowing amid weaker consumer spending. And German luxury car maker BMW is planning to expand its Mini portfolio in India next year, aiming to tap rising demand beyond metro cities. BMW India President and CEO Hardeep Singh Brar said the company is looking to introduce new Mini models while sharply expanding its presence in smaller towns. Mini currently operates in 9 cities, but BMW plans to double that footprint, adding locations such as Jaipur, Lucknow and Ranchi. The company says growing demand from non-metro markets is driving the push, with a stronger local presence also boosting after-sales confidence. BMW expects at least double-digit growth next year, even as the luxury car maker continues to outperform the broader auto market. Time for a very short break, but coming up on the other side, Rohit Srivastava will join us to help us understand this FPI exodus that the Indian stock markets have seen. Can RBI's forex intervention help curb that? And also, it seems like a very, very stalling start for the Indian equity markets this morning. What's in store for the rest of the week? We'll get to that after this short break.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा से लोन लेना एक मास्टर स्ट्रोक है।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
ये बेस्ट है सर।
हमेशा वाला क्यों नहीं?
मिश्रा जी, आपके लिए फूलों की बरसात, बिरला ओपस एश्योरेंस देने के लिए।
मतलब प्रोडक्ट वारंटी?
ये एक्स्ट्रा है। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री। पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। रजिस्टर करो birlaopus.com पर।
अपनी सुपर पावर यूज करने का टाइम आ गया।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
लाइफ जब भी आगे बढ़ने का मौका दे, अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
Red Fort explosion. Let's get you all the updates. Following the blast, there is of course a South Indian connection of Dr. Shaheen Shahid. Because this is news of national import that search operations are underway across the entire Al Falah University campus. The blast killed 12 people. Prices, however, of Nandini ghee have been hiked. KMF has defended Nandini is the brand. I've been getting a lot of queries on my phone. What's for the people of Karnataka? Okay, you can play tennis as much as you want to, but I'm the umpire and I will say please. There is an eyeball to eyeball confrontation. Where is this going? What is the way out? The farmers, they can actually shake a nation. Both of you down, because I can also shout Prashant ji.
watching Morning Brief at 9 right here on News 9. Time to get into all the market action news. But first up, let's look at how the US markets closed on Friday. Well, Wall Street ended lower on Friday as investors rotated out of technology stocks, rattled by fresh concerns over an artificial intelligence bubble. The weak sentiment around Broadcom and Oracle, along with rising US Treasury yields and hawkish signals from policymakers, added to the pressure. Take a look.
Wall Street's major indexes closed lower on Friday, with the Dow losing 0.5%, the S&P 500 shedding 1%, and the tech-heavy Nasdaq plunging 1.7%. Shares of Broadcom tumbled after the chipmaker warned of slimmer future margins, causing renewed concerns about the profitability of surging AI investments. This was after a nearly 11% sell-off in Oracle on Thursday, following the cloud software company's weak financial forecast. Oracle shares added to losses on Friday, even after it denied a Bloomberg report that its data centers for ChatGPT maker OpenAI were being delayed. Ross Mayfield is investment strategist at Baird Private Wealth Management.
The end of this week has featured a couple of days in a row of AI anxiety, Oracle's report followed by Broadcom's report, and just a renewal of the skepticism that we've seen a lot over the last couple of months around the viability, the profitability, the return on investment from the AI build out, the broader hundreds of billions that are going into infrastructure. And we're seeing it play out in different ways, whether it's profitability metrics or questionable guidance. But, ultimately, this is a problem with concentration at the top of the market. A few big stocks can bring the whole thing down, but the rotation under the surface has been pretty, I think, resilient. We've seen a lot of strength from other sectors. And ultimately, I'm honestly pretty excited about this because I think that this sort of skepticism and hole poking in the AI trade is not something that happens in bubbles, in asset bubbles. There's a skepticism that I think is healthy, and a rotation that is healthy as well.
Along with Broadcom, heavyweight AI leader NVIDIA was a major drag on the S&P 500, with shares losing more than 3%. Other AI-related stock drops included SanDisk, which plunged more than 14.5%, CoreWeave down 10%, and nuclear technology firm Oklo, which lost more than 15%. Meanwhile, Treasury yields rose, also pressuring stocks, after a group of Federal Reserve officials who voted against the central bank's interest rate cut this week voiced worries that inflation remains too high to warrant lower borrowing costs. The Labor Department's reports on non-farm payrolls, consumer inflation, and retail sales data are due next week and may offer greater insight into the health of the economy.
All right, and the sell-off that Wall Street saw on fears of that AI bubble was not an isolated event restricted only to Wall Street. Even Asian markets have opened much lower this morning, and that is a sentiment that seems to be fairly universal at the moment. So look at the charts. Hang Seng is down about 0.8%. Taiwan's TAIEX is down more than 1%. The worst hit seems to, in fact, be South Korea's Kospi, which is down about 1.6% or so in trade this morning, and Japan's Nikkei also down about 1.46, 1.5%. China, more or less, mainland China seems to be unaffected by this AI bubble fear that Wall Street is reeling under. Meanwhile, let's pivot to the Indian markets, and it seems to be a pretty stalling start for the Indian stock markets as well. In fact, Sensex and Nifty both down about 1/3 of a percentage point in trade this morning, slipping into those levels that investors would be jittery of the market slipping into. So as we speak, Nifty 50 is below that psychological 26,000 level, and Sensex also racing to touch that 85,000 level and maybe fall a few points below that. At least that's a signal that seems to come from morning trade. Meanwhile, the small cap and the mid cap space also pretty much in line with the market. Small caps a little better than the mid cap space. Mid cap down about again similar 0.33% or so. Volatility in the Indian markets is a little higher today, but still below that 11 level at about 10.61. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding to the loss losses this morning, and it's pretty much a mixed bag, more reds than greens. At least that's what the advanced decline ratio seems to suggest in the first 10 minutes or so of trading on the street this morning. But consumer stocks like Mahindra and Mahindra as well as Eicher Motors are taking a beating this morning. M&M is down about 1.5% or so in trade. Eicher Motors down about 1% or so. In the energy pack, ONGC is down about 2.2% or so in trade, and another Nifty 50 heavyweight Bharti Airtel is down about 1% or so in trade. Of course, as expected, the knock-on effect of Wall Street is visible on the Indian IT stocks as well, and the IT stocks are down on an average about 0.5 percentage point or so in trade this morning. Rohit Srivastav, founder and strategist at India Charts, joins us this morning. Rohit, good morning. Pleasure having you back with us on News 9. Mood this Monday morning seems fairly damp, doesn't it? Is it just Wall Street and fears of the AI bubble, or is there more to read fundamentally into what's likely to happen in the markets this week, looking at the charts this morning?
No, I think most of Asia and including India just reacting to what happened in the US. And what happened in the US, I think, has more to do with a buy on expectation and sell on news kind of event around the Fed.
Okay.
It might not have so much to do with the AI bubble talk because you still have growth in AI stocks. They are not at crazy valuations. It depends on how you really look at it. But I think what really happened on Friday is bond yields went a little higher, higher than they were on Fed day, and that got markets a little spooked. But many times, around Fed meetings, we get these wild swings before and after the meeting, which is sort of just discounting the event. I think the actual moves will become more visible in the next 2-3 days, and that is what we should really be looking for. So therefore, I would call today's move just reaction to post-Fed meeting profit booking. If you look at the Nasdaq rally pre-Fed meeting, it was pretty strong. It went up for 1 to 2 weeks.
Right.
There's a couple of days of correction after that.
All right. So this seems to be just investors digesting the news and digesting the commentary from the US Fed. Meanwhile, I'm looking at auto stocks this morning, and there seems to be a bit of a bloodbath on auto stocks, Rohit. I'm looking at M&M, which is down about 1.6%, Eicher Motors down about 1% or so, and pretty much the entire Nifty 50 auto pack in the red this morning. Just simple profit booking consolidation, because it seems that the sector has also been in some sort of a consolidation mode ever since we saw the rally after the announcement of GST cuts.
Well, it has been a sector that has also done well. It actually outperformed the Nifty when it was flat to down. And therefore, maybe, so again, I think today's reaction may just be based on, movements in bond yields. Versus what the central bank actions are. I think both in India and the US, what we are seeing is bond yields are not coming down even after the central banks have cut rates. But they do have plans to buy bonds, directly from the market, whether it's the 40 billion per month in the US or whether it is OMOs of over 1 lakh crore, which the RBI has announced. So that is likely to contain that volatility that we are seeing in the bond market near term. And so I think autos, which are interest rate sensitive stocks, would continue to do well, because you match it with the next best sector. On Friday, we saw metals do exceedingly well, and they are sort of flat. They are not down so much. And same with financials if you look at Bank Nifty. So maybe autos is the odd one out right now. But I would only see that as a reaction, maybe some positioning that got excessive.
All right, some excessive positioning potentially. I'm also looking at energy stocks this morning, Rohit, and ONGC seems to be one of the biggest losers on the Nifty 50 pack this morning. The stock is down almost 3% or so in trade. Overall, again, the energy pack also, despite not too much volatility or movement in global crude prices, this is a sector that seems to be reeling under some pressure this morning. What's likely to be the reason behind this?
So it may be ONGC specific. We saw some very good moves in the oil marketing pack. So I think that is really looking good, where I'm referring to the likes of HPCL, BPCL, and they all picked up on Friday, showing early signs of another rally kicking off. And if we compare ONGC, say, with Reliance, then we find that Reliance is, barely down, only around 0.5% after having, jumped up from 1,520 all the way to 1,560. So it's not really lost that much. So it may be very specific to ONGC, which has actually been falling, for quite some time. For some reason, I would have to really delve deeper into it. But it's actually falling since, I think, 31st of October.
Right.
It's been in a downtrend. So we really need to wait and see where ONGC bottoms out.
All right. I want to sort of pivot, Rohit, now to a broader trend which we witnessed this entire calendar year, and that is to do with the FPIs pretty much dumping Indian equities. In fact, 2025 has now become the year of foreign investors selling equity, both Indian equities as well as Indian bonds. Now, as per a report by the Hindu Business Line, out of the 234 trading days until December 12th, FIIs have been net sellers on 141 of those trading days, with this figure being all set to exceed the 146 net sell days recorded in the year 2022. And till date, the highest number of net selling days in India in the last 2 decades was recorded back in 2008 financial crisis, when the sell days rose to 154. Now, net outflows till December 12th had increased to more than 1.5 lakh crore rupees. In fact, 1,52,273 crore rupees. Now, when distributed across all trading days of 6 hours each, this figure indicates that around 110 crore rupees exited the Indian market every trading hour this calendar year. Now, this selling peaked on December 10th when FPIs pulled out as much as 5,386 crore rupees in a single day. Now, multiple reasons behind this. Rohit, I want to understand from you, one of the reasons that seems to be is the sharp depreciation of the Indian rupee, which has weakened to record levels in recent weeks, which has further dampened foreign investor sentiment. So, in your opinion, do you think there should be a little more RBI forex intervention to arrest the fall of the rupee, at least in the interest of FPIs staying committed to the India story?
No, I think that's a circular argument, because, what causes the currency to weaken? Is it the FPI selling that causes it to weaken, or is it the weakening that causes FPI selling? So, we can go in circles on that. So you have to really come down to the fundamental situation as to why the rupee is weakening right now. I think the RBI used to intervene a lot a year or two back, and to some extent we would call that over-intervention. I think we are in a situation which is much better. You need to allow it to weaken a bit, because otherwise it gets excessively strong against competitors. And in the current environment where we still have those tariffs on us, it's actually helping exporters to some extent, getting a weakening rupee. But now if you look at the underlying, our current account deficit, which used to be over 2%, 5-8 years ago, is now, had gone almost to 1%. It's risen a bit because of the tariffs. But it's still well below 2%. So in that sense, we have a much better reserve position. We have a much better current account deficit situation. So that's not really the cause of the weakening. But definitely in the near term, you've had high gold prices. So that does result in gold demand, gold imports, which often affect, trade flows and the currency itself. And of course, FPI flows, which have been weak because they've been supportive of markets historically. But for a long time, we've not seen that. And we also need to look at, when we talk about FPI flows, you have to net it off against how much money is really circulating out into IPOs. Because, when you look at CDSL numbers versus the daily NSE data, sometimes the outflows are not that big. But still, it has been a net outflow year. There is no doubt. But a lot of money gets circulated into IPOs as well.
Right.
And that's also the reason why we saw the mid and small cap selling last month, which was a lot of IPOs getting allotted, and people had to sell stocks to make those investments. So that's part of the pressure point that we've seen recently.
Right. So interesting, this entire circular conversation around whether it is the FPIs which are leading to the decline in the rupee, or a weak rupee which is leading to the exodus of FPIs. But also, there's this question of rich domestic valuations which are making India relatively less attractive as compared to other emerging markets, which are potentially offering better value to foreign investors. So do you think it is time, as we come to the end of 2025, you're on the verge of entering 2026, is it time to revisit the discussions around frothy valuations, especially in the small cap and the mid cap space that you were talking about some time back?
So it's a very bottom up call. We've been scanning across stocks since we've started providing research services, and what we're actually doing is we're looking for segments and sectors where valuations have come off during this consolidation phase between 24 and 25. And I can tell you that there are a handful of such places where it's happened. In fact, if you just look at in the big caps, the biggest performing sector has been banking. At the start of 2025, banking stocks were at the lowest valuations that we had seen in a decade. And that's sort of what has driven money back from funds who've been consistently receiving the SIP flows, have been allocating more and more money to financial stocks. And so that's a trend we very, very clearly seen. So the simple point I'm trying to make is there are many pockets of low valuation within the average valuation. If we look at, where the markets bottomed in COVID, it was at around 17 times historical P. Right now we are at, closer to 19 times or 20 times based on that. And that's not very, very far off. The peak valuation for Indian markets has been closer to 30 times. I'm talking about the Nifty itself. And we are not there. So the valuation argument has to be sector specific and stock specific. I don't think this is an extremely overvalued market.
Okay, and which are the sectors which seem to be dealing with that high valuation right now? And do most of these pertain to the small cap and the mid cap space?
Within mid caps, it is stock specific. I think at a sector level, most would appear corrected because we have seen sell-offs in, say, power, energy, everywhere. I think almost every segment we've seen some kind of selling. And so if you look at sectors, you might not find significant overvaluation. In fact, you might find pockets of undervaluation. But when you look at individual stocks, some cases you still find price earnings at 80, 90 times. And some cases they've actually dropped from 100 to even 30 or 20. And we end up looking for those opportunities where the valuations have come off and growth is still persistent.
All right, and talking about valuations and extremely high valuations, I want to now shift focus to another commodity which has seen soaring valuations, and I'm talking about silver here, Rohit. Silver prices rose to a historic 2 lakh rupees per kg on MCX on Friday. Some analysts expect even more upside, indicating perhaps dips at 1.7 to 1.78 lakh rupees per kg could trigger some staggered buying, while the target seems to be about 2.4 lakh rupees in the year 2026. So Rohit, I want to understand from you, should the textbook example of asset allocation now be updated with silver rather than gold making it to the mix, at least for retail investors?
So two things here. One is that on a long-term basis, and long-term I mean 3 years to 5 years, silver outperformance relative to gold is definitely here to stay. The only thing people need to be careful about is, when do you buy? If you didn't already buy silver as part of your portfolio allocation, then this is probably not the right time because we've gone through multiple months of gains. And when I look at the monthly chart, a very simple technical indicators, the RSI, on gold it's at 92, on silver it's at 87. On such readings, we typically would not want to be making fresh purchases. We would really want the market to correct and pull back. One of the intermarket divergences that we study is that you have seen new highs in silver recently, but you haven't seen new all-time highs in gold. And when you get that kind of an intermarket divergence, it's an early warning of a trend reversal. Okay. But when I'm saying trend reversal, this is not long-term. This may be applicable for the 3 to 6 month period.
Okay.
And that is where what we are saying is that if you have excessively allocated to precious metals relative to equities, this is probably a good time to shift back from precious metals to equities and consider precious metals again once the correction is done.
Okay. And do you think, given the kind of rise that silver has seen from 1st Jan 2025, I remember silver was trading at 90,000 rupees per kg, and on Friday it touched 2 lakh rupees per kg. Given that sharp rise that we have seen on the graph of silver, is it time for some switching of allocation from gold to silver once there is some sort of a price correction or the RSI reading that you were talking about on silver?
Yes, definitely. So we look at the gold-silver ratio and it's a very long-term indicator. Some people try to trade it short-term, but we look at a 20-30-year chart of the gold-silver ratio. All the most significant peaks, are done at the top end of the range. We've actually just come off the bottom end of the range and started to break out higher. So there's a very clear sense that in a precious metals bull market, silver tends to outperform gold. And we are not done with the bull market yet. So definitely on a correction, you want to own more silver than gold if you're looking at, returns through the precious metals bull market.
All right, Rohit Srivastava, let's leave it at that. Thank you so much for covering that entire gamut of everything from FPS sell-off to adding gold to your kitty and, of course, the mood on the markets this morning. As always, pleasure having you here with us on News 9. And we will slip into another short break. But first, the global headlines that we're following for you this Monday morning. US President Donald Trump admits in a Wall Street Journal interview Republicans could lose the 2026 midterm elections despite boasting of the greatest economy in history. Kevin Hassett, US President Donald Trump's top economic advisor and frontrunner to lead the Federal Reserve, says the central bank must show independence while stressing the president's opinion still carries weight in shaping policy. Ukrainian President Volodymyr Zelensky offers to drop NATO ambitions during marathon talks with US envoys in Berlin as negotiations to end Russia's war intensify. US chipmaker Nvidia tells Chinese clients it is exploring additional production capacity for its powerful H200 AI chips after demand outstrips supply, underscoring relentless global appetite for advanced AI hardware. Britain says new laws governing cryptocurrency firm will take effect from 2027, promising firm but proportionate rules aimed at protecting consumers. The European Union prepares to soften rules effectively banning new combustion engine vehicles from 2035, owing to pressure from automakers like Mercedes and Stellantis amid fears of fines, job losses and political backlash. China and Saudi Arabia agree for closer coordination on regional and global issues, with Beijing praising Riyadh's role in West Asian diplomacy following talks between the two nations' foreign ministers on Sunday. A father and son attack on a Jewish Hanukkah celebration at Sydney's Bondi beach kills at least 15 people, plunging Australia into mourning and triggering a nationwide security response. And Chile elects its most right-wing president in 35 years of democracy on Sunday, with arch-conservative Jose Antonio Cast scoring a thumping victory over his leftist runoff rival. And these stories and more on the other side of the break. You're watching Morning Brief at 9.
सुपर पावर यूज करने का टाइम आ गया।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
लाइफ जब भी आगे बढ़ने का मौका दे, अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात। Our very first Business and Economy Literature Fest 2025 on the 20th and 21st of December at Taj Talkutir, Kolkata.
Presented by EIILM Kolkata. Associate sponsor Bama Lorry, Mukhorochuk, Alliance Broadband, Priyogopal Bishoi and ChatGPT.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's look at all the global stories that we're following for you this Monday morning. Ukrainian President Volodymyr Zelensky has signaled a major policy shift, indicating Kyiv may drop its long-standing ambition to join NATO in exchange for firm Western security guarantees. His comments come as Zelensky met US envoys and European allies in Berlin amid mounting pressure from US President Donald Trump to reach a settlement to end the war with Russia. Now, Trump's envoy Steve Witkoff and his son-in-law Jared Kushner took part in the peace talks in Berlin, where Zelensky agreed to give up NATO ambitions in return for legally binding security guarantees from the United States, Europe, and as an alternative. Now, while the shift aligns with one of Russia's core war demands, Kyiv continues to reject any proposal that would require Ukraine to give up territory to Moscow. Kevin Hassett, a top economic advisor to U.S. President Donald Trump and the frontrunner to lead the Federal Reserve, says the central bank must remain independent even though the president's views matter. Now, in a TV interview, Hassett said that while he discusses monetary policies with President Trump almost daily, the Fed's final decisions must ultimately be based on data and not politics. Now, Hassett added that while Trump holds strong opinions on economics, the president will have no formal influence over Fed policy decisions if he were to succeed Jerome Powell as the Fed chair in May next year. U.S. chipmaker reportedly told Chinese clients it is considering adding production capacity for its powerful H200 AI chips after demand outstripped supply. Now, sources say companies including Alibaba and ByteDance are keen to place large orders through approvals from Chinese authorities, though those approvals from Chinese authorities remain uncertain.
NVIDIA is looking into adding production capacity for its powerful H200 AI chips. Sources said that's what the US tech giant told Chinese clients after orders exceeded its current output level. President Donald Trump said on Tuesday the US government would allow NVIDIA to export H200 processors to China, although it will collect a 25% fee on those sales. The H200 is NVIDIA's second fastest AI chip and the most powerful Chinese companies can currently access. A source said NVIDIA is leaning towards adding new capacity as demand from China is so strong. NVIDIA didn't immediately respond to a request for comment. Major Chinese companies including Alibaba and ByteDance have already reached out to NVIDIA this week about buying the H200 and would both like to place large orders. But there are still uncertainties around the issue. The Chinese government hasn't yet given permission for any purchase of the H200. Beijing has also more recently pushed to promote its own domestic AI chip industry. A source said Chinese officials held emergency meetings on Wednesday to talk about the matter.
Now, staying with the world of emerging technologies, Britain says it will bring cryptocurrency firms under full regulation from 2027, placing them under the Financial Conduct Authority's oversight. The government says the move will protect consumers, boost confidence and secure the UK's position as a global financial hub while shutting out what it calls dodgy actors from the crypto market. The European Union introduced similar legislation 1 year ago, while the United States is progressively introducing its own rules regarding regulation of cryptocurrencies. The digital tokens, of which Bitcoin is the biggest, have come under increasing scrutiny from regulators after a string of controversies in recent years, including high-profile collapses of exchanges. And staying with the United Kingdom, well, Britain's economy unexpectedly shrank in the 3 months to October, highlighting weakening momentum ahead of the government's recent budget announcement. Now, the figures have reinforced market expectations of interest rate cuts by the Bank of England shortly.
Britain's economy shrank unexpectedly in the 3 months to October and lost momentum in the fraught run-up to Finance Minister Rachel Reeves' budget. Data released Friday showed gross domestic product contracted by 0.1% in the August to October period. Economists polled by Reuters had forecast a flat reading. In October alone, the economy contracted by 0.1% against forecasts for a 0.1% rise. It underlined the tough economic backdrop faced by Reeves when she prepared her tax-raising budget, announced on November the 26th. That was after several weeks of speculation that had bamboozled investors, consumers and businesses. Sterling fell slightly against the US dollar and British government bond prices rose after Friday's data. It casts doubt on the Bank of England's expectation that the economy will grow by around 0.3% in the fourth quarter as a whole. Manufacturing output, impaired in September by a cyber attack on Jaguar Land Rover, failed to recover as economists had hoped, and the Office of National Statistics said retailers in particular had struggled. In response to the data, the Finance Ministry said it was determined to defy the forecasts on growth and create good jobs.
And shares of the Union Bank of Switzerland, or UBS, jumped to their highest level since 2008 after Swiss lawmakers floated a compromise on stricter capital rules. Investors welcomed the move as a way to protect the bank's global competitiveness following its takeover of Credit Suisse. Take a look.
UBS shares hit their highest since 2008 on Friday. Swiss lawmakers have floated a compromise on new capital rules for UBS to try to ensure it stays internationally competitive. UBS is Switzerland's sole remaining global bank since it bought then crisis-hit Credit Suisse 2 years ago. The Swiss government has proposed that UBS should capitalise its foreign subsidiaries by 100% rather than 60% at present to cover potential losses abroad. UBS shares jumped more than 4.5% after a newspaper reported the proposal from a group of lawmakers. The bank's shares have now doubled in value since just before it bought Credit Suisse. UBS's balance sheet is roughly double the size of annual Swiss economic output, making the government eager to avoid a repeat of the collapse of Credit Suisse. The state's proposal forms the core of reforms that UBS says would mean finding an additional $24 billion in capital.
And Australia is reeling from one of its darkest days after a terror attack at Sydney's iconic Bondi beach, where a traditional Jewish festival of Hanukkah turned into a scene of mass violence. As per latest police reports, 15 people at least have lost their lives and around 38 people were injured, including a 10-year-old child, when two gunmen dressed in black opened fire, triggering panic and chaos.
What we saw yesterday was an act of pure evil.
Australian Prime Minister Anthony Albanese said on Monday the attack on a Jewish Hanukkah celebration in Sydney's Bondi beach is a dark moment for the country. More than a dozen people were killed, including a 10-year-old girl, after gunmen opened fire at the iconic beach. Dozens remain in hospital. Police now say a father and son duo were behind the attack.
We are satisfied that there were two offenders involved in yesterday's incident. One is deceased. The second is in critical but stable condition in hospital at the moment. The offenders are a 50-year-old and 24-year-old male who are father and son.
Officials have described the shooting on Sunday as a targeted anti-Semitic attack. Eyewitness video showed celebrations taking place at the event.
How many? One, it's enough. Just to feel Hanukkah.
And then people fleeing after the gunmen opened fire. Witnesses said the attack lasted about 10 minutes. Police said around 1,000 people had attended. Drone video verified by Reuters appears to show at least one of the suspects on a bridge overlooking the scene, firing his weapon repeatedly before falling to the ground. Sunday's shootings were the most serious of a string of anti-Semitic attacks on synagogues, buildings, and cars in Australia since the beginning of Israel's war in Gaza in October 2023.
It's just grief, utter grief.
Alex Rivchin is from the Executive Council of Australian Jewellery.
Look, I remember speaking to the media outside my former home on January 17th after the firebombing attack there, and I said at the time that this will end in someone getting killed. And at that time things were escalating from, aggressive protests and vandalism to firebombings. And who could have thought that we would take that enormous leap from firebombing, which is serious enough, to actual murder, of the massacre of this sort, body bags on Bondi Beach at a Hanukkah event.
As Australia mourned the victims of its worst gun violence in almost 30 years, Prime Minister Albanese said he would take action.
And the Jewish community are hurting today. Today, all Australians wrap our arms around them and say, we stand with you. We will do whatever is necessary to stamp out anti-Semitism. It is a scourge and we will eradicate it together.
And that's all we have time for on this edition of Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9, so stay tuned.
Speed, it's relative. The more you speed up, the more the world slows down. And when you are fast enough, everything becomes still. That's when you see the world as it truly is. Servo Hypersport F5, when speed is your default.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
Our honorary speaker Arun Maira, from Tata Group to Member Planning Commission, author of Reimagining India's Economy. His journey defines corporate India's legacy.
Eastern India's first Business and Economy Literature Fest 2025, 20th and 21st December, Taj Tal Kutir, Kolkata.
Presented by EIILM Kolkata. Associate sponsor Bama Lorry, Mukhorochuk, Alliance Broadband, Priyogopal Bishoi, and ChatGPT.
You're essentially operating in a space which is mostly unorganized. Or, or people go, get it stitched themselves, or, one of those things, they're buying a branded kurta, branded, set, and everything is something that has evolved over a period of time. And still now, it still gets dominated, the market gets dominated by the unorganized player, isn't it? So what are the challenges then to build a brand and to build a brand that does a connect with the consumer?
See, if you'll see the last 10 years, there has been a big movement in India as, the millennials, the newer generations have come in, that we've seen a change. They don't want to go to the same place because Indian wear, if you know, every city, every small area has their own local shop which your parents are used to going, right? Now the younger generation doesn't want to go there. Because there is a branded movement. Today, with social media coming in, brands are playing such an important role that most of the segments and sectors which are actually unorganized, people, whoever has tried to build a brand there has been mostly successful, even in commodities, because that young, educated customer who's, fashion forward, who's on Instagram, who's aspiring to, see so many celebrities, even today, something becoming popular in the US is accessible to somebody sitting in a small town like Indore as well.
Right.
So the aspiration is that. So today everybody wants to break the shackles. They want to associate or they want to purchase from brands which have a pan-India presence or a global presence because it just gives them some sense of confidence, right? Most of them are working today. When they go to office, they feel that pride of wearing a brand as compared to wearing something. So that movement has definitely been there, and because of the speed that we launch our new trends, we've been able to create that connect that if there is some trend happening around the world, we'll have some inputs at Libas and we'll find some outfits which are resonating that particular trend. So that plays a very important role in creating that connect with the consumer, that I see something on Instagram and then suddenly I go to Libas and see something similar there, so that just creates that connect. So.
Why is West trying to fuel anti-Russia sentiments before Putin's visit? Why is India important in this narrative war? Which are the red lines for the Russia that the West has crossed? And what is the Indian role here? One of the biggest bilateral agendas of the President Vladimir Putin's state visit to India. Fighters are on the agenda, sources are saying.
It is about 17 Mach of the terminal velocity. No one can shut it down.
Local production at HAL's Nashik facility that begins on December 4th is greater defense cooperation. Is it correct to say that the S-500 are a completely different ballgame? The Su-57 represents Russia's leap into fifth generation technology.
They always give us the
contemporary technology.
Do you think that Zelensky really underestimated the Russian resolve? That Trump is not deeply invested in NATO? Do you think that if there's a peace deal, if something happens, if there's a breakthrough, what will be the future of NATO? Russians are always available to us in the context of the transfer of technology.
This is India's #1 news network, and you're watching News 9, English news as it should be.
Hello and welcome to News 9. I'm Verghese Abraham. First up, let's take a look at the top stories of the hour. Prime Minister Modi embarks on 4-day visit to Jordan, Ethiopia and Oman. Visit aims to boost trade, defense cooperation and global South ties. Luthra brothers likely to be deported to India today as Indian embassy engages Thai officials to facilitate the process. NIA to present charge sheet in Pahalgam terror attack case before the special NIA court in Jammu today. Delhi-NCR engulfs in smog as air quality plunges into severe plus zone across multiple areas with AQI hitting 500 and Noida sector 125 recording 461. IGI airport issues a travel advisory amid low visibility. Civil Aviation Ministry issues advisory for northern India as dense fog disrupts visibility at Delhi and other airports. As of now, 40 cancellations and 4 diversions have been reported because of fog at Delhi airport. Veteran Congress leader Shamnuru Shivashankarappa passes away at the age of 95 at a private hospital due to age-related ailments. Shooter among 16 killed in terror attack at Sydney's Bondi beach. Australia police say father-son duo behind Sydney mass shooting probe on to find others involved. Australian Prime Minister Albanese proposes tougher national gun laws after mass shooting in Sydney. Delhi-NCR is once again engulfed in a thick blanket of toxic smog with air quality plunging deeper into the dangerous severe plus zone. Now, this is happening across multiple locations. Delhi records highest AQI of the season for second consecutive day. Pollution levels have spiked sharply, making the air unsafe to breathe and forcing authorities to step up emergency services. Several parts of the national capital are now recording extremely high AQI levels. As of this morning, AQI at Anand Vihar stood at 493, Wazirpur touched 500, the highest on the index. At JLN Stadium, AQI stood at 467, 488 at Siri Fort, 474 at ITO, while Chandni Chowk recorded 439. The situation remains equally grim across the NCR region. In Noida, Sector 125 recorded AQI levels were at 461, underlining how widespread the pollution crisis has become. Officials attribute the sharp deterioration in air quality to slow wind speeds, stagnant atmospheric conditions, unfavorable weather and poor dispersal of pollutants, allowing toxic particles to remain trapped over the region. Now, the dense mix of smog and fog has also reduced visibility to dangerously low levels, severely affecting